I've got Joachim Fels in Frankfurt to discuss these questions. But first of all, we're going to talk about the outlook for inflation in the Eurozone. We just saw some numbers coming in that indicated a slight increase in the inflation in the zone, up to 1.5% from 1.4% the following month. Joachim, you think that investors are actually not very concerned at this stage about the outlook for inflation, and you think that that could be a mistake. Why is that?
Well, there are two reasons for this. First of all, I think over the near term, let's say over the next 3 to 6 months, I think we'll see a fairly sharp increase in headline inflation simply due to the past depreciation of the euro, plus the VAT tax increases that we will be seeing in several European countries. So that's the near term. Inflation will not stay as well behaved. However, I'm much more worried about the longer term consequences of easy global monetary policies for inflation further down the road. So this is not just a European issue. I think we are setting us up for rising inflation, especially in the emerging market countries. The Fed and the ECB are pursuing an extremely loose monetary policy. This is making it very difficult for emerging market central banks to raise interest rates and to fight their inflation pressures. So I think you'll see a sharp rise in global commodity-based inflation, and we will re-import this into the US and into Europe over the next couple of years.
What about the impact of the 750 billion euro emergency fund that was just announced by the European Union? Could that have any inflationary effects further down the line?
I think it could contribute in an indirect sense. I think this big package creates some moral hazard. So while in the near term we are seeing more fiscal tightening in the likes of Spain, Portugal, Greece, Ireland, and maybe a couple more countries in the euro area, I think the mere existence of such a big emergency fund will over the medium term create more emergencies. If governments know that there is a fund to bail them out eventually, they will over the medium term pursue a more expansionary fiscal policy than otherwise. So I think this could add to pressures on the ECB to monetize, to inflate away the debt problem. So I think this is a concern as well.
Which of the countries would you be seeing any fiscal profligacy? Because we've heard that Portugal and Spain, like Greece, are going to try and rein in their budget deficits. What areas are you worried about in particular in Europe?
Well, what I'm worried about is that those countries that are tightening fiscal policy account for less than 20% of euro area GDP. I think we have to look at the large countries in the core, especially France and Germany, where I see no signs whatsoever of a fiscal tightening. These countries account for more than half of euro area GDP. And again, they're not tightening fiscal policy. If anything, Germany this year is still easing fiscal policy.
Joachim, you've talked in the past about a possible breakaway by Germany and some other nations in the Eurozone. Do you still think that's a possibility, near or even longer term?
Well, I think it's clearly not a near-term possibility, but it is a distinct possibility longer term. I think Europe is on a slippery slope now towards more fiscal instability, towards a politicization of monetary policy, which has already started. The ECB had to make several embarrassing U-turns on its policy over the past couple of months. And I think if this leads to further euro weakness and a rise in inflation pressures, then I think some of the more stability-minded European countries might decide to break away. But clearly that's a long-term story. It's not a story for now or for the next couple of years.
Joachim, thank you very much.